So let's focus the spotlight on some of the themes which could be doing well in this market. Ishank Mittal is joining us now. Ekansh Mittal, I'm sorry. Ekansh is a SEBI-registered research analyst and is based out of Kanpur and looks at themes in mid-cap and small-cap which could generate a lot of alpha. One of the themes to start with, Ekansh, is garment exporters. There was some amount of pressure which came in for garment exporters because the global demand itself went slightly on the lower side. Talk to us, why do you like this theme, and would you look at some of the big garment exporting companies which are doing not so well right now, but their cyclical downturn may actually be short-lived, maximum a few months. The moment global markets recover, demand comes back, they'll do well. Why do you like this theme?
Yeah, so thank you, Ajay. Thank you for having me on your show. I'm a SEBI registered research analyst. So, just think that investors should do their own due diligence before like investing and do not consider anything as recommendation. So, as far as garment exports are concerned, so we have been looking at a few companies and we have been going to the talking to the management. So, what happened was last year wasn't so good for the industry because firstly the cotton prices increased. They increased to almost like 1 lakh per candy, and further there was a demand slowdown in US, Europe, and UK regions. But there's an interesting segment which is babies and kids garment export segment. And therein, when we talk to the management, what we are realizing is now that firstly the prices of cotton have come down from 1 lakh per candy to around 55,000 per candy. So that's a relief. Further, there are talks between India and say UK and Canada for free trade agreement. So these talks have been going on for some time, and probably some result is expected in say June, July. So that would give some additional benefit to these companies because that would lower the trade barrier and taxes by around 5% especially for Indian companies. And then further, based on our talk, what we realize is that the demand in the babies and kids garment segment hasn't really gone down. And at the same time, the retailers, the customers there, they are looking at consolidating their vendors and also trying to move a certain portion of their sourcing from, say, China to India. I mean, not to everyone here in India, but well-managed companies which are compliant in every form, which have set up good manufacturing and sewing facilities. So there's a combination of factors that could work for these companies, which could help garment exporters going forward. Not immediately, but maybe a quarter down the line, things could start looking good.
Okay. Let's talk about dyes and intermediaries. Dye and dye intermediary. That is the one theme which you like as well. Why do you like that theme, and what kind of margins traditionally these companies have actually enjoyed, and are they likely to go up?
So again, we have a slightly contrarian approach to investing, and our investment horizon is say 2-3 years or more, like 3-4 years. So what has happened again is that the last 1 year was really bad for dye intermediate companies in India. Again, a combination of factors. First, the demand slowdown in Europe, energy crisis in Europe. So a lot of these things are exported to such regions, Europe, US, and there. So there was a demand slowdown there. Further, the another issue was that the Chinese, there was a zero COVID policy in China, and the demand was subdued there. So what happened was China dumped a lot of these products in Southeast Asian markets. So overall, the demand was slow, and another factor was that again the textile mills were running slow because of high cotton prices and energy prices. So there was a dual combination of wherein the demand was slow and also there was dumping from China as well. So what has happened is the companies could not run their plants at optimum capacity utilization. The prices of H acid, vinyl sulfone were also kind of subdued and have come down. So because of these factors, a lot of stocks are down 40-50% in the last 1 year. So again, what we see is that, and based on our talks with the management, I mean, there are a lot of listed companies in this space, and everyone has been talking about that probably the worst is behind and the demand has bottomed out. And even if you look at results of certain companies, they have come out with March 23 results, and they have come up with slightly better results than what they were posted in the last 1 or 2 quarters. So a combination of factors in terms of lower stock prices and the problems that the sector was facing, it seems that things may have bottomed out for this sector, and probably a few companies could could do well over the next 2 3 years with improvement in their capacity utilization and improvement in demand.
Ekansh, why do you like, what kind of pigment stocks do you like? As in, pigments is a space which I, if I'm not wrong, have many small cap stocks, small to micro caps. And it also got impacted because of the geopolitical situation, the war like situation, all of that. Do you see that reverse?
Yeah, so again, that's what happened with dye intermediates. Similar situation, almost similar situation panned out with pigments as well. There was a demand. First of all, pigments are used in industries like inks, coatings, and polymer products. So there was obviously a slowdown in demand in India as well. And again, geopolitical situation, all that stuff related in, even slower demand in exports as well. Add to that, I mean, India is a large producer of cyanine pigments, and China increased anti-dumping duty hugely for products that got exported from India to China, and slowdown in China, and they were also like dumping the products in Southeast Asia. So similar kind of situation panned out in pigments as well, and there are a lot of good companies in this space. They had created capacity. They have created capacity in specialty pigments as well, but they could not really fully utilize those. In fact, due to demand slowdown, they were running at much lower capacity utilization. So that overall impacted their financial performance a lot. And similarly, the stocks are down 50-60% or 40-50% from their highs. Now it seems, if you look at the last few quarter results, last especially March 23 results, there's been an uptick. And again, if you talk to the management, it looks like the worst is behind for these companies. So if these things pan out in terms of improvement in demand, the improvement in capacity utilization, and then the stocks also like trading at their lows, so you could have a situation wherein there could be both improvement in numbers and good outlook for stocks over the next 2 3 years.
Uh, Also, talk to us, Ekansh, why do you like the CNG part of the business from the energy space? And also, uh, because there is a lot of stuff over there. One is CNG suppliers, the other pump companies, distribution companies. Then there are capital goods companies in the CNG value chain. Which end do you like? And what's the trigger here?
See, basically what happened, we are looking at more at towards the end of, for instance, say companies which are supporting the growth of CNG segment, infrastructure creation, or say like companies which are supplying say cylinders uh, for car usage and all. So what happened was that between 21-22, the CNG pump prices increased from almost like 50 odd rupees per kg to 80-90 rupees per kg. Uh, and this, what happened is that there was earlier a good arbitrage between petrol, diesel prices and CNG prices. And the additional benefit with CNG is that you get much more efficient in terms of like the mileage that you get. So there was a good increase. I mean, the commercial vehicle segment was getting good demand in terms of CNG vehicles offload, in terms of CNG vehicles. But starting mid 2022, the price arbitrage between diesel and CNG got compressed, and that suddenly had an impact, especially on the commercial vehicle side, because in the passenger vehicle side, there's still a good arbitrage between petrol prices and CNG prices. But that did not happen in the commercial vehicle side, and the demand started going down. So there are a few companies which are into making CNG cylinders and supplying to OEMs or in the aftermarket, and they got impacted badly. But now what has happened is that the government has like come out with a pricing mechanism wherein they have capped the prices. So now from $8.5 per MMBTU, the prices have been capped at $6.5 per MMBTU. Even on the downside, the prices have been capped at around $4.5. With this new pricing, the pump prices for CNG have come down. So if I look at recently in say Mumbai, the pump prices for CNG have come down from 90 odd rupees per kg to 79. While currently the pricing for diesel is say 95 and petrol is 106 per liter. So with this change in pricing mechanism and and the lower stock prices, not much enthusiasm about those stocks, I believe that this could be a good potential to this could be a good industry to look at. And we also have to note the fact that the government has been pushing for huge infra creation in terms of supporting the CNG usage and the overall gas usage from around 6 odd percent to 15 odd percent by 2030. So there's government push, and one of the obviously the supporting things they have done is by fixing the prices. So we believe this could be a good segment to look at again because the prices are down and there's not much interest in the market in the segment.
All right. All right, Ekansh, we'll let you go on that one. Thank you so much for joining us today and chat with us about the themes to study and dig for ourselves. You've given us even enough hints and homework